What's good, people? Today we are going to be looking at Fubo. This is a stock in which has jumped up massively in 2025. However, on the day chart here, we can see we are actually in a short position. What is the valuation of this stock? Is it something in which you should be buying into at this point, or is it slightly overvalued now? We are going to be trying to find that out in this video. So quickly looking at Fubo, we can see that they are currently not in profit. But by the looks of things, we can see that Fubo might be going in profit in the next couple of quarters. So it might only be a matter of time before Fubo does enter into the green. But on a day chart here, we can see that we are well into a short position on the MACD indicator. And when we look at the moving averages, we can see we are above the 100 and 200 day moving averages, but we are below the 20 and 50 day moving average. This could basically mean that the stock is in a bit of a stable position at the moment, but you ideally want to see the 50 day being below this stock. It just means that the momentum is not on the bullish side. It could actually lead to a bit of sideways action or selling pressure. And when we look on the 15-minute chart, this is the sideways action in which you would expect to see. And I think it could be something in which we are going to continue to see for another couple of weeks. I did actually put a poll out on X saying if Fubo is a buy, hold or sell, and 90% of people put this at a buy, 6 at a hold and 3 at a sell. This is based off of 31 people. And when we actually see what the analysts are saying for Fubo, they are putting this in at a buy as well, with 3 at a buy, 1 at a normal, 3 at a strong buy, 1 at a normal buy, 4 at a hold, and only 1 at a sell. And we can see a price target here being set at a high of $6.4 and a low of 2.6 in the next 12 months. Okay, so with that in mind, what do their financials actually look like? Well, on a liquidity ratio, this is not ideal. We can see here that they have a liquidity ratio of 0.4, which means for every dollar of debt in which they owe, they only have $0.4 to pay this back in. And on a retention rate, we can see that they are obviously not in profit, but we are seeing this slowly starting to increase. However, the trend lines here are actually projecting this to go down based off of their previous results. And finally, looking at the free cash flow here, we can see that this is now actually positive, which is really important as it means that they will have money for stock buybacks, paying out debt, or paying out dividends in which they do not pay. Okay, so when we look at the charts here, what can we see on an exponential basis? Well, we can see the price has obviously increased, and so the trend lines are projecting this to go up. We are above these trend lines now, which is a good thing. And on a volume basis, we can see that the price obviously had a massive volume spike, but since then we basically flatlined on the volume, which is not really ideal. I would like to see a bit more volume being traded into this stock, and on the 91 and 90 day basis here, we can see that it is the exact same story. Again, I would just like to see this going up a bit more, even though I know that sideways action doesn't really felicitate the volume going up. And what are the quick figures for this stock? Well, of course, they don't have a PE ratio as they're not in profit. They have a 52-week high of 6.45 and a low of 1.1, this being a difference of $5.35. And they actually have a beta of 2.20, which is surprising for saying that the volume isn't actually that high for this stock. They were founded in 2009, which does raise questions for me on their finances, because with them having a pretty shit retention rate and liquidity rate, I would expect it to be better than that. And the company has been public for 10 years now. So I do therefore think they should be doing a bit better. On the mean surprise here, we can see that they beat analyst expectations by nearly 50% every time. And based off of the analysts, I have a growth rate set at 218%, and I have put an earnings per share at 0.01 for the sake of this analysis, which is based off of next quarter's anticipated results. And for the moment you've all been waiting for, this is my intrinsic value valuation, if you like, of this stock. On the left here, we have an intrinsic value set at $6.03, with the current price being at $3.18. This gives you a margin of safety of 25%, setting the price at $4.52, which puts this in at a strong buy for Fubo on the bullish indicator. And on the right here, we can see on the bearish indicator, I have the intrinsic value to be set at only $3.04, and with a margin of safety of 25%. Again, this gives you an acceptable buy price of $2.28. If we go in between the two here, we have an intrinsic value set at $4.53 and an acceptable buy price at $3.04. Which essentially means that I think it's fair to say the stock does seem to look undervalued currently. Maybe not so much on the bearish indication, but when we go in between the two and take these two indications here, we can see this stock does look to be undervalued. And when we look on Peter Lynch's valuation, it doesn't give us a result. This being simply because they do not offer a PE ratio. And we cannot conduct a discounted free cash flow analysis on this stock due to the fluctuations in their free cash flow over the last 4 years. We basically get a result saying that this stock is worth minus $666,000, which is just not right. However, there is some good positive news around Fubo stock with this article here saying 3 stocks under $10, and Fubo is listed here in number 1. I am now going to eat my words as it says the bad behavior exhibited by lower quality companies in this space can spook even the most seasoned professionals, which is why we started Stock Story, which I couldn't really give a shit about. But here it says why Fubo is not exciting. And at number 1 here we have the performance surrounding its domestic subscribers has lagged its peers. Negative free cash flow raises questions about the return timeline for its investors, which I pointed out earlier on in the video, which is fair. Unfavorable liquidity position could lead to additional equity fund. Yeah, exactly what I said earlier on in the video. It's not an ideal situation with their finances. However, it is not all bad as price targets are being raised from $2 to $3.50 from some analysts. So, of course, it's not all that negative for this stock. And I think the only reason why it is negative on some counts is because of their liquidity and retention and the free cash flow, which is not ideal. And I think for that reason, I'm going to be giving Fubo a mild buy rating. And so I have put down here at the bottom Fubo in at a buy, but this is purely just off of their intrinsic value. And if you were to be putting a lot of money into this stock, I would actually definitely say not to, because of the lack of profit. Their financials aren't looking great with their liquidity. Their free cash flow is barely just now taken into the positive, and their retention rate isn't great. If I was putting a lot of money into this stock, I wouldn't bother, especially because the upside isn't actually that high. So therefore, I'm going to put it at a buy, but it's one to put not stop losses in, but, well, yeah, you should put your stop losses in, but it's one to take with a pinch of salt, really. It's not one in which I can like definitely say, yeah, buy that right now. It's something that I would approach with a lot of caution. So I hope you have found this video useful and you have enjoyed it. Of course, that is the primary goal of these videos. I do now have an X, as you can see, so if you could give me a follow on here, it would be greatly appreciated. I post whatever the fuck I feel like on here, to be honest. A lot of polls, whatever, you know, whatever I feel like at the time. So I hope you have enjoyed this video and found it somewhat useful. If you could leave a like and subscribe, it would be greatly appreciated. With that being said, I will see you for the next video.